Okay, now the next thing which we need to discuss here is this process of creating a provision and the double entry of that. You know what happens? Provision is like an obligation which it's a liability for future which you will pay, and many times it has like a longer period of time. Maybe you have to pay something after 5 years, maybe you have to pay something after 10 years, maybe even after 20 years. You don't know. You might have provisions for 20 years long period. So you know that you have an obligation. Let's suppose we're talking about in previous question that if you have a piece of land where you construct a factory, so it's about construction project, construction of factory you do, okay? So when you do construction of factory, you spend something like, I don't know, 30 million on that, on construction. But then you have an obligation to restore the land to original condition, restoration, provision for restoration, we call it. So you know that after 20 years, or at the end of 20th year, you will have to demolish everything, remove everything, and bring back the land in original condition. And the cost of doing that thing after 20 years is 10 million. So this 10 million, it is your obligation. We understand that it is our obligation, but this is not our obligation today. I am booking my records, I'm making my accounting transactions in my books today. This 10 million, I cannot say my liability. You can't say that it is my liability today. This is your liability after, how to say, 20 years. So what you need to do, you need to find out its present value. You need to find out the present value of provision. So always remember that provisions, initially, they are recorded at the present value. And how do we find out the present value? You know that it is 10 million. You divide it with 1 plus the interest rate, whatever it is. Let's suppose that it is 8%, 0.08. And you have seen the lecture of discounting and compounding. I put it on the course page and divided by 20. So 10 million divided by 1 plus 0.8 divided by 20. Let me do it here. How do I do that? I would say 10 divided by 1.08, and I would take it power 20. Okay, this is the formula for finding out the present value. Please watch discounting and compounding. What I'm doing now, I'm actually discounting. This process is called discounting. Discounting means finding out the present value of a future cash flow. I have a future cash flow of 10 million. What is the present value of that in terms of today? If I put equals to sign, it makes me 2.145 million. So it means that my present value today is actually only provision is 2.145, or let's call it 2 million. And this 2 million, I will add it into my non-current asset, and my cost of asset will be 32 million in my books. 32 million in my books. And I have a 2 million of provision here. Now, if I leave this 2 million of provision here as it is in my books, then after 20 years, how can I pay 10? You know that you only pay what your balance sheet shows you liability. If I don't touch it, if I leave it as it is, it will remain in my book as 2. End of 20 years, it will again be 2 million, and then I will not be able to pay 10 million. What I need to do now, the next step is called unwinding. Unwinding. Unwinding means that I will inflate it, I will increase it on yearly basis. I will increase it on yearly basis until at the end of 20 years, it becomes 10 million. And how do I do that? Again, the same rate at which I discounted it back. Now I'm going to compound it. So here I will say 2 million. So the formula here would be for compounding, the formula would be your present value, which is 2 million, multiplied by 1 plus 0.08. Every year I will do it. So when I will do it, it will make it 2.1 or something like this. Now let me put some numbers here because we need to use the, how to say, let's see how it works. So I have my present value. So I call it my opening provision. My opening provision is 2 million, and I do my unwinding in the year 1, which is at 8%. So I would 8%. So this is 2 million times 8%, which is 0.16. I make a total. And this becomes my 2.16 is called my closing provision. Okay? Closing provision, 2.16. This actually what happens that this 0.16, it goes to your P&L as your finance cost, and this goes to your SOFP as your provision. In year 2, you do again an unwinding. In year 2, again at 8%, and this time you will do it with this one. Now it has become slightly bigger, and this becomes your closing provision. And again, in year 2, this goes to P&L, and this goes to your SOFP. So if you see that the value of provision is increasing year over year. In the beginning, on day 1, it was 2 million. End of first year, it is 2.16. End of second year, it is 2.33. Trust you me, you continue it for 20 years at 8%, it will exactly become 10 million. These numbers, 0.16, it goes to the income statement as finance cost, and this will be added to the closing provision. So your closing provision is increasing. Now, in case of this particular example, like which I said that this factory thing, so let's suppose that we created this factory on 1st of January. Let's suppose we started the project on 1st of January, okay? So on 1st of January, what I should say that debit my non-current asset and credit my bank, which is 30 million, and it is 30 million. And then again, this is my asset, which I made. Then again on here, I record the provision, and I would say debit non-current asset, and I say credit provision. So if you pay attention here, this 30 million I spent in cash on construction of the factory, whatever, and then I recorded 30 million. And it's bank or cash I paid. And then on the same date, and date, by the way, I will explain you, there is one complexity with the dates. There is one complexity with the date. Then I say debit non-current asset 2 million. And this time I don't say credit bank, I say credit provision 2 million. And then end of the year on 31st of December, you say debit finance cost, which goes to P&L, and credit provision, because you are not paying it to someone, and that would be the 0.16, okay? 0.16. So if you notice that provision credit here and provision is credit here. So provision is adding up. You are not paying it to someone. It remains in the books. And when 20 years will finish, this number will become 10 million, and then you will pay. The opening provision which you created and added into the books, which was 2 million in the non-current asset. If you see non-current asset was 2 here, and then it was 30 here. That will not change. So non-current asset will remain 32 million, and it will be depreciated over 32 million. Are we clear on that?
So what do you call finance cost? Can it be called another name?
It is finance cost, or you call it interest expense, whatever you may call it. I take it to the income statement. What should I call it then if I don't call it finance cost? It's time value of money.
Okay.
It's a $2 million thing today, but in 20 years it will be 10 million. Remaining 8 million will be spread over 20 years. The asset is not, you cannot say that my asset, so you can't charge your asset with 30 plus 10, okay? This 10 is after 20 years. You can't take 10 today. You can only take 2 today. Now, about timing, there is something very interesting and very important. See, here, just to make it simple, I just did not mention the date, and I created the provision also on the same day. Usually, you should not create the provision on the same day. Let's suppose that your construction began here, and then construction finished here. So it started in January, and the January 2021, and the construction finished in June 2021. 6 months was the period of construction. So this date, when your construction completed, when your construction finished, this is the date when you should record provision, because on this date, it becomes your liability. So provision does not become your obligation at the time of signing the contract. It actually became the provision when the asset was completed. So now asset is completed, and I have an obligation to remove this asset. So asset completed on 30th of June. So you should record provision here. And then your financial year is ending on 31st of December. So you should remember that for the first 1 year, you should find out this finance cost for 6 months. So you should say 2 multiplied by 8% multiplied by 6 by 12, 6 months. In the first year, you have only 6 months of finance cost, because your full year is here. Full year is January to December. But January to June, construction was going on. When construction finished on 30th of June, that is the day when you create this double entry and you create a provision. So opening provision of 2 million comes here. And then from here, you charge 8% for 6 months period, which means half year. So this is very important. Sometimes students, they take full 1 year of provision, which definitely you will lose marks. So date is important. Are we clear with this concept? So I did not, as part of this lecture, I did not explain you the concept of discounting and compounding, because I'm sure that you already have seen that lecture of discounting, compounding, and you understand this formula, like PV into. So I'll just quickly write down the formula. I'm not going to explain it. So you say that future value is equal to present value multiplied by 1 plus n, 1 plus I power n, or you can say that present value is equal to future value divided by 1 plus I power n. If any one of you has not watched the video on compounding and discounting, I suggest that you must watch it. It's an essential tool in your hand. If you don't understand compounding, discounting, because compounding and discounting we use in some other situations as well. It is a concept from financial management, but it is such a basic concept that we assume that everybody should know it. It's not part of any of your IFRS standards, but IFRS standards, they do use discounted values. So you need to understand discounted values. Okay, there is sometime it is also possible that you remeasure your provisions. Okay, you do remeasurement. Remeasurement means that, let's suppose that, by the way, when I told you that this is a factory and you will have to, how to say, restore it, and after 20 years the value is 10 million. How do you find out this 10 million? Can you actually call a contractor or a supplier and show him a house or a building and tell him that, guy, listen, I will call you after 20 years and then you will have to remove it, give me the price now. He will laugh at you, actually. He said that I can tell you the price which I will charge today, but after 20 years, maybe I will die, maybe you will die. I don't know. I cannot make a commitment. So he's not going to give you the price, actually. What happens that you ask the price for today, how much it cost me today, okay? And then you inflate it according to your national inflation. So if I ask someone that this is the factory today, as of today, and if I ask you, invite you to come and demolish it and restore the land in original condition, how much are you going to charge me? And he will say, I will charge you X dollars. And then you know that in your local environment, inflation is 6% or 7% or whatever, and then you inflate it to the inflation rate and then find out this number Y. This is the procedure. And then when you found out this procedure number Y, then what you do, then you discount it not at 6%. This is 6%, okay? You don't discount it 6%. Then you start doing it at your discount rate, your VAT or your discount rate, and then you take it back at your VAT, okay? So 6% is only the inflation number there. Okay, now the thing is that it is possible that sometime these inflation numbers, they change over the period. They go higher or lower than expectations. So it means that the provision which we created initially of 2 million, and we thought that this 2 million we will keep on winding up, and this will become, 10 at the end. But I know that now I don't need 10 at the end. Because of the inflations, I probably need 12 in the end. So my provision estimate will change. So it means that somewhere here, you need to revise your estimate of provision. When you revise your estimate of provision by 2 million, so that 2 million is going to be your extra expense. So this is debit your P&L expense and credit your provision, because I need to increase provision by 2 million at this particular date. I revised my estimate. I saw that the estimates which I created before, they are no more valid anymore. So, and if I'm showing these estimates like this to my users of financial statements, it's not the true and fair view. It's not the faithful representation. I need to make an adjustment. So that as a result of this adjustment, there is going to be a 2 million of extra expense, whatever it is, maybe 2 million here, maybe 2 million there, maybe 2 million here, like I need. So I say debit P&L, that is an extra expense to P&L, and I say credit to my provision, so that my provision balance increases because I need more money in the provision account. So I make a credit to the provision. And similarly, it is possible that you need to downgrade the provision. You think that you already have created more than what you needed. So then you debit this provision account, then you make a debit to the provision account, which means that you are crediting it, debit to the provision account. So this is about provision estimates. They might change. A little bit of inflation I discussed. I will do some question. And by the way, we need to discuss one topic specifically, which is called environmental provisioning. So this is also, like I said, that provision is such an important topic, and it has so many details. And you guys have asked maximum number of questions in this lecture, because I know that I can't imagine a business which is not facing difficult scenarios related to provisions. And why they become difficult? Because we accountants, mostly we are used to of recording the historical information. We get some invoices and we see the numbers, we see the account codes, and we put the data. In case of provision, there is a lot of estimation is involved, which as accountants we are not used to. We don't talk about future. We always recorded the historical data. But in this case, we are talking about the future things. And when we start talking about future things, then it becomes a subjective issue, because my opinion could be different than your opinion about future. Okay,